This is Talking Capital Markets, where ideas drive the markets. We move past the headlines and into the heart of the deal, breaking down IPOs, M&A, governance, and the strategies driving real growth in today's capital landscape. No noise, no hype, just conviction, execution, capital in motion. If you're building companies, raising capital, advising boards, or deploying investment, you're not just listening, you're in the room. And now, here are your hosts, Mike Blankenship and Brian Jue.
Thanks for joining Talking Capital Markets with Mike and Brian. I am Brian Jue and my co-host, Mike Blankenship. How are you today, Mike?
Doing well today, Brian. I'm looking at some of the tailwinds. Look forward to talking to you about capital markets and sort of where we see things and, hopefully a lot more in the coming year. So how about yourself?
Yeah, doing good. Beating these snowstorms, but very excited about everything that's happening in the markets right now. And on that, let's talk about the Invest Act of 2025. We spent some time talking about that in one of our previous episodes. And again, it's exciting to see that emerging growth companies will have an easier opportunity of accessing capital through a smaller IPO. Since then, we've seen that NASDAQ has set up some, laid out, this is what our requirements are, this is what we expect, our minimum threshold, so on and so forth. And shortly thereafter, NYSE did the same thing. So if you could, we can get your perspective from the legal side. Where do you see the differences there between the two? Is one going to be easier than the other? And just your whole take on what a company would need to do and where do they need to be before this becomes a consideration for them?
Yeah, I think between the NYSE and NASDAQ, and of course we're looking at other potential stock exchanges, but between the two of them, with NASDAQ increasing the requirement to be at least 15 million, NYSE has similar rules. So on that point, I don't think it's too dissimilar, but I will say a company should be prepared early with their valuation and making sure that they're ready to go public with the right size. NASDAQ, of course, has a new IM or new interpretive material, 5101-3, where they're talking about, you might meet the standards, but they can have procedures in place that make it more difficult for you to get approved because they're going to look at your advisors, they're going to look at the underwriters, everything about the management. And partly this has to do with there were a lot of delisted companies that had a lot of trading manipulation. And so that caused some of the angst at the exchange. And so that's why some of this heightened scrutiny of an issuer could go through. And so you might see some of that delay there, Brian, at least on the NASDAQ side. NYSE, similar rules on size. And, they have the NYSE American, which can bring on the micro caps and smaller cap companies and watch themselves grow and then graduate to the big board. But I do think it's certainly challenged companies to really rethink if they're going to go public and if they really do want to make sure they have the right valuation and the right size and their advisors or underwriters are giving them the right advice and can find them the right money to consummate and get it done, price and ring the bell. So that's how I see it. I don't know if you have a view there, but.
Yeah, something that we've talked about with a few people and what we see on our side too, with some of it is it almost seems like some of it is, they don't want to just come out and say it, but it's somewhat directed at some of the foreign issuers where we've had, issues on the exchanges in the past where they come out, they go away and reverse and, just kind of play that whole game, so to speak. Do you see that? Do you see a part of it is part of this to kind of limit some of the foreign issuers that might be not have the best intentions? Or is this just kind of an across the board, hey, we're looking for a better standard of company?
Well, I think on that latter point, they are looking for that better quality based company, but you are correct. It's mostly foreign private issuers that can get caught up in it because they're really trying to examine and making sure there's nothing there because it's hard for an exchange that's listed in the United States to have any kind of enforcement action. The way the SEC does is they'll delist them and or deregister them and put a halt on the stock. The exchanges are aware of that, and I think that's important for context that, yeah, you're right, it's mostly foreign private issuers, but domestics get caught up in that longer wait. So to answer your question earlier, be prepared and get that application in early so you can be ready to list on the timeline that you want, not their timeline.
And on that note, preparation. We've talked a lot about that. Preparation being everything. And again, this is kind of one of those areas where if you have the right advisors in place that are guiding you and the right people that you have on your team, on your board, on your management team, this is where that type of stuff really does matter.
Yeah, I mean, you have to have the right exactly, it makes a huge difference. You have the right people to get it done. I mean, I don't look, when you're going through this process, it is a long, daunting process, and so having all of it done right, the steps right, and having a timeline in place is critical to get it done.
No, that makes complete and total sense to me. Now, as far as the timing goes, what are you guys seeing and what have you seen and where do you think it's going to be with that entire comment period? Do we see here that will the SEC just come out and tell some of these issuers, boom, hey, you don't have a shot because this is wrong, this is wrong, this is wrong? Or are we going to see more of what's kind of happened in the past where they send a list of comments out, the company answers, and then they send another list out, the company answers, and then we're going to see another set of comments coming out asking questions from the very first time? Are we going to see more of that, or do we see the SEC being a lot more direct and moving forward with the process? What are you guys seeing there?
Yeah, I think the process is gonna be more direct. I don't think, and they've made comments, you can their public speeches that it's not gonna be merit based. So meaning they're not gonna just start asking questions if they don't believe that this is a business that's gonna survive as a public company. But that iterative process where you're going back and forth, it will exist. I do think it won't be the same where they're drilling down on a particular issue where an investor may not even care. So really kind of putting the principles base to work and really trying to do that. So I think kind of down the road we'll see a lot more of that. So one thing I am excited to announce and hopefully we can get that word out here is that I'm going to work with the director of Corp Fin at the SEC and council and others to get data on public companies to improve Regulation XK, which is the regulation, the closures for registration statements, as well as the CADI. And so getting information from public companies will be critical. And I'll have more about this soon. And, I have a call actually today. So I think it will be important for issuers, your friends, Brian, my friends, clients, yours, and ones that are kind of out there kind of wanting to get their voice heard, that we'll be able to hopefully improve some of that. And we're not talking about a full deregulation. It still will have investor protections, but I'm talking about wasted disclosures that cost more and really have a problem with doing this. This all stems from the Securities Regulation Institute, which is the 53rd year. It's out in San Diego. Northwestern sponsors it, and a lot of security lawyers are out there, and all the commissioners and directors and others and a lot of SEC staff. And this is sort of trying to understand. I think it goes back to the whole, make IPOs great again. If we're going to go on the great again
Yeah.
theme. And so, we at Winston, and I'm spearheading, I reached out directly to them. And so spearheading this project, and I think hopefully it yields a lot of dividends and makes it a lot easier as, we are talking about various ways to improve disclosures, ways to make it a little easier for companies to be out there. And if there's a way that the SEC does this, and I know you mentioned the Invest Act of 25, but that hasn't gotten through Senate yet, so it hasn't been up. But this is a way that, you know, under the regulatory body we have today, hopefully improving and putting that out. And that, because, typically Congress controls what the Securities and Exchange Commission overall will do. So like that's the Jobs Act of 2012, and that's what the Invest Act is trying to improve upon. This is within the scope of the SEC's mandate and try to improve that. I think there's a lot we can do here, try to reform it. And so I'll certainly be leaning on you, Brian, and others to provide kind of feedback. We'll be out the market with a survey soon. May not even be one of my clients, but I'll certainly reach out and hopefully get some feedback, because it will be critical to kind of gather that and hopefully improve what we're seeing today. I mean, some of this disclosure people gloss over. It's not necessary. It doesn't protect an investor, but it's a cost for companies to put out and collect data for themselves. So happy to announce that we're going to be doing that. it's something I think will be important to the market. And I think Winston and myself trying to lead this will be important. And hopefully we are that leader and people see it. So
That is absolutely fantastic, Mike. Congratulations. And it just shows that your experience, your relatability, it's got you where you are now, and now to be able to really effect what's going on in the markets at a much, much higher level, far beyond just you and your firm. I mean, it's tremendous, really is. And I think also for our viewers of Talking Capital Markets with Mike and Brian, you should, again, feel very fortunate that we have someone like my co-host here, Mike Blankenship, that's a part of this, who is on the ground, in it, deep in it, and just really there to understand and help us understand what's going on and what's coming down the pipe, and everything about the capital markets from an experience point of view and also from a regulatory point of view as well. So Mike, fantastic. Again, congrats. And hey, let's do it. Whatever help you might need, I'm more than willing to help.
yeah, well, I'll certainly get you in the game there, Brian. So we'll see. I know the SEC really just wants the data. It's not really so much the comment. They don't need a memo
Of course.
from
Yeah.
lawyers, but they want to know what the real public thinks and try to make it a more seamless process. I mean, I look at you got AI coming in, and you've got other resources that hopefully make disclosure and other things easier, but you still have disclosures and you still take litigation risk. Part of my job as a securities lawyer is to help be a disclosure lawyer, but at the same time making sure that it gets done right and the material information is out there, nothing's omitted, and that's a critical piece that I think companies should understand. I mean, that's the role of the lawyers, hopefully the gatekeeper of information and information out to the public, because you really are opening up yourself when you do file a registration statement. You're out there with the financials, you're out there with everything about the business, and so it is critical uh, that we have the right kind of disclosure regime in place. The you don't want a chilling effect on companies. I think part of what we've seen in the last decade is, beyond SPACs, beyond that. I mean, we've seen a lot fewer companies coming to market. Maybe that's a function of, the private equity market having a lot of portfolio companies and buying, selling, or doing other things with them, but not coming to market. And I think part of that is the regulatory burden and the cost. And so if you can reduce that, I do think we'll have a lot more, as we've discussed, Brian.
Wow, that's fantastic. Well, Mike, thank you again. Congratulations again. Thank you to all the viewers out here for watching Talking Capital Markets with Mike and Brian, and we'll catch you next time.
Thank you.